They just set their growth target around 5% this year. Too conservative or too optimistic as they emerge from a nearly 3-year lockdown? It also comes as Rockefeller Institute's Rashir Sharma says he doesn't think the Chinese economy will possibly ever overtake the U.S. On that note, let's bring in Brendan Ahern, Chief Investment Officer at KraneShare's. Brendan, great to have you here today on a day where we're also waiting more clarification from the administration on whether there's going to be an EO further cracking down on investment in China. What are your expectations?
Well, one, on a purchasing parity basis, China's already larger than the U.S. economy. So for that previous speaker, he may have missed some of the data there. But I think we are going to see a kind of reverse CFIUS on private equity, on venture capital around potentially military sensitive area. That's actually potentially a real positive, that it's not quite as deep as really the more hawkish views. But I think net, China's economy is going to have a solid 2023, really led by the consumer, something that was reaffirmed by Premier Li in his working report readout today.
I don't want to get super wonky, but PPP is more to measure kind of relative standards of living, isn't it? If we just want to talk about the ability to win a military, arms race, wouldn't it matter much more kind of nominal GDP one versus the other?
Well, I think, China did mention that their military defense budget would go up about 7% from last year, but that puts it about just over $200 billion versus the $800 billion we spend annually. So it kind of puts a little bit of this kind of military, that pure data, shows that we have a huge advantage over China, which I don't think anyone sees going on. Net, China's economy has gotten very large. It's just only a few trillion behind the United States. So yes, the percent GDP growth will slow, but ultimately, who cares? I mean, I think ultimately, who cares about GDP data? We're really talking about earnings of companies that are geared to China's consumer. And we've got a great one coming after today's close with Trip.com, their big kind of bookings, or Expedia. And on Thursday, we've got JD.com reporting earnings. And I think ultimately, what we heard today is it's going to pro-consumer. That is just the number one takeaway. It's all about consumption.
Why, Brendan, is it then that these tech giants were not invited to the Congress this time around? Normally in the past, it's the biggest companies, it's the tech high flyers. This time around, it was not. It's industrial, it's AI. I mean, doesn't that tell you that they're a little bit out of favor with the leadership?
Well, I think one, because of a lot of the U.S. stance to companies such as Huawei, China needs to raise its domestic semiconductor manufacturing capability. Just if they're going to be cut off potentially from unreliable suppliers, they're going to have to pivot and create their own, or go to other suppliers from beyond U.S., potentially very problematic for U.S. semiconductor providers. I think on the internet side, on the domestic consumption side, Kelly, it's a good point that we didn't see them, but I think that's potentially protecting them from being pulled into some of this political rhetoric between the two countries.